You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And we've got another batch of interviews from our visit to Washington, D.C. and the America's Credit Unions Government Affairs Conference, which I guess was now 2 weeks ago, if I'm counting correctly. The weeks are all blurring together. We spoke with Brian Kaas of TruStage about their new stablecoin launch, specific to credit unions and financial institutions, and Dan Michaeli, the co-founder and CEO of Glia. They've got some great data, having done a study of 400 financial institutions and put together a benchmark about how they use AI in their operations. So get to both of those real quickly. Once again, like last week, there's just so much going on. We want to try to get to those as fast as possible. So I'll be brief with these opening comments. I'll just remind you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. And a couple of things we'd like you to check out there are CU Unplugged, the conference, the Unconference we've got going on in San Francisco, March 30th to April 2nd at Visa's Market Support Center. Should be a great time. I'll be there. It's going to be a great conversation. Hope you think about joining us. You'll find more information about that at the Best Innovation Group website, or you can go straight to cu-unplugged.com. What the heck? You'll also find the link with yet another batch of information about it if you check out the show notes to this episode. Also want to remind you, if you check out our town hall, cutownhall.com, you'll also find that at the big website. Our next session will be, depending on when you're listening to this, it might be tomorrow, Wednesday, March 18th. And we're going to be doing a recap of all the exciting stuff that happened at GAC. Several of us who were there will be sharing our impressions, but what we really want to hear is your impressions. So if you were there, please chime in. We'd love to hear what kind of your really took were the key takeaways for you. And if you weren't there, it'll be a great chance to catch up. A couple of other really quick things. Credit Card Competition Act. Sigh of relief yet again, but don't get comfortable. The latest talk of how that might be kind of brought into the legislative arena was that there was an attempt to attach that to the housing bill, which has gotten a lot of attention and was passed recently. It wound up not happening, but not without a lot of effort and a lot of work from the folks at America's Credit Unions, Defense Credit Union Council, etc. It'll probably be back, so don't rest on our laurels too long. One of the comments, and I believe this was from somebody at the America's Credit Unions, in one of the panels at GAC, they pointed out something that is, I've confirmed this is accurate, and it's a pretty telling statement. Interchange legislation has never won a vote on its own. It's 0 who knows how many, but the basic, or in many cases, just never even got to the floor. Durbin Amendment, probably the best known case of it, was tucked into Dodd-Frank at the relative late stages. The notorious Illinois Interchange Fee Prohibition Act, as so it's called, it was only approved because it was tucked into a budget bill at the 11th hour overnight without any discussion. So for whatever reason, it doesn't seem that interchange bills can pass muster if they're actually looked at in the light of day. But again, more of that coming, but that's something that for now we can be a little bit relieved on. On the floors at GAC, a couple things I just want to quickly mention. Old friend of the podcast and somebody who I really enjoy the work that she's been doing for some time now in the credit union space, Chrissy Cole, who's the founder of Penny Finance. Saw her, and I believe I actually ran into her near the CU broadcast booth. I think she was doing a segment with Mike Lawson. If that's up there already, I'll post a link to it. Penny Finance has been on the Big Cast a couple of times now. What I didn't know when I saw her there is it has now been acquired by Array, the company that actually, we'll get into that for just a second. We first ran into Chrissy at Venture Tech. I believe it was in 2023, if I'm not mistaken, but we've crossed paths several times since then. Great to see. I know she was in the process of just going into another fundraising round, and the folks at Array came and contacted her and said, "Hey, how about this idea instead?" So they've joined forces. In terms of building out their own portfolio, they saw things they liked with Penny Finance, and those two are together now. And they're not the only ones. When I saw Chrissy, I also ran into Chase Ninekin. who we've spoken to again in 2023. Chase is the founder of Chimney, and they won a Vennovate Best of Show back in 2023. And I'll see if I can pull up that interview and post a link to that one as well. But they, yet again, in almost the exact same time frame, Array's been on quite a roll. They also were acquired by, Chimney was acquired by Array. So they're gathering. And while we're at it, when I did a little bit more research, a company that we interviewed back in 2024 after Finovate, MoneyKit, also had been acquired very recently by Array. So I'm not sure. Maybe MoneyKit's listening to the big cast and finding things they like from checking us out. So congratulations to all those folks, and we'll definitely be following along with how Array comes together. They've raised, I think, 190 million of funding along the way. So obviously putting some of that to use to building out their portfolio. Okay, let's get to the action of the interviews. Stablecoin, obviously a hot topic. TruStage have one of the big announcements at GAC, rolling out what they're calling TSDA, their new stablecoin. And after this conversation, I understood even a little bit better why they're going at this approach to really try to purpose build a stablecoin that works for credit unions. So here's my conversation with Brian Kaas to get a little bit more out of that. I'm here with Brian Kaas, the president and managing director of TruStage Ventures, who was a very busy man at GAC last week. The announcement came out of the new TruStage credit union-centric stablecoin. And I know you've been making the rounds to try to explain exactly what this looks like, Brian. So thanks for taking the time.
Yeah, really happy to be here, Glenn.
I know there's been a couple of different kind of groups and consortia within the credit union world who have been exploring this idea. But as far as I can tell, you've now jumped to the head of the pack in terms of making this announcement and starting to really move forward with the pilot. Do I have that right?
Yeah, that's correct. I mean, there certainly have been a lot of discussions within the industry for the last several months following adoption of the Genius Act. I've been plugged in with several of those groups and those discussions, and I think we really saw the need for there to be an industry-wide solution, a stable coin for the credit union system. And that's really what prompted us to really start to focus on what that might look like, and leading to the launch of TruStage stablecoin.
And TruStage overall, your reach within the credit union community, I think, is pretty integral to your value proposition, right? Because you've got connections with, I think, was it north of 90%?
Yeah, I think we're at about 93% of credit unions have relationships with TruStage, and I think that will really help create that network effect, which will be really important to ensuring that we have a stable coin that is built and designed for credit unions that is going to be viable long term. I think if we have a system of fragmented issuers, that does create greater challenges to establishing that long-term network effect.
Yeah, I totally agree. I mean, you got so many stable coins out there already, but you're pretty concentrated with a couple players. So, it only makes sense if people come to the party and decide to use it. So,
yeah.
Can you say a bit more about your model? I know you're working with, you're partnering with, is it Blocktime?
Yeah, so Blocktime Financial is a blockchain infrastructure company. They've been around for over 6 years, really building an institutional focused platform to enable stablecoin transactions. So we'll be working with them to provide the technology to mint TruStage stablecoin, and to also provide some of the interfaces that we'll be offering to credit unions. So they will be a partner of ours, kind of helping power the TruStage stablecoin.
But they're the ones kind of creating the pipes in the background. You're the face to the organization.
That's exactly right. We kind of wrap all of the infrastructure that needs to go around the technology piece of this, and it's it's a pretty significant undertaking to do this.
Yes. In one of the early reports, I saw this referred to, and it's TSDA is the ticker symbol, or whatever you want to call it, that it'll go under.
That's correct.
That I saw that you were not going to be member facing, but as I kind of have heard more about the way you lay this out, that's true in your first phase, but you're already taking a 3-phased approach. Can you talk about how you're thinking about rolling this out?
Yeah, happy to. So we really do talk about this in three phases. Phase one is going to be just a pilot that we will be already rolling out in 7 states. And what we'll be looking there is just getting credit unions involved. We want to get their input on certain design features of the stablecoins themselves, and other refinements as we roll this out more broadly. On a parallel path, we'll be seeking licensure as a stablecoin issuer. So we need and want to get that federal license in hand as quickly as possible so that we can then roll this out to all credit unions in all states. So that's really phase two of our launch here, and really focusing on both the pilot and phase two on B2B transactions, some of the back office automation that credit unions could utilize, whether for shared branching, loan participations, partnering with those companies that do those services to provide, again, some stablecoin use cases that won't be member facing, while at the same time, getting prepared for offering member-facing solutions. So providing the digital wallets that we expect members will begin to start asking for as that stablecoin adoption starts to accelerate, allowing peer-to-peer payments, and positioning credit unions as kind of being relevant to the members that are going to start to engage more actively around stablecoin. Yeah, I'd add, Glenn, I think historically stablecoin usage has been really kind of contained to the cryptocurrency space. But I think when you look at with what the Genius Act has done in terms of creating that framework for widespread issuance and adoption, and what we're hearing from Walmart, Amazon, Meta, some of the other companies out there that are already working on implementing some type of stablecoin infrastructure. Those big players will have, I think, significant impact on consumer behaviors to drive that consumer adoption, maybe at a faster pace than what we're thinking could be the case.
When you talk about the future where the members actually have the digital wallets or holding coins in there, how far out are you thinking? Is that a couple years, or when too early to say?
Yeah, I think it's really too early to say. Other than stablecoins create an opportunity for some of those big merchants and retailers to create different incentives, financial incentives to utilize stablecoin over credit cards, for example. And why that matters, obviously, to those big players is they're paying pretty significant interchange costs. Right. And so if you could eliminate those costs, maybe convert part of those savings into incentives to create stickiness with the consumer. Even my mom, who doesn't know anything about stable coins, but knows everything about trying to get a good deal on things, it will influence that behavior. I just don't know how quickly it will happen.
Well, the easier you make it. I mean, the thing I always think of is the Target Red Card. 5% off, sign me up. You're done.
Exactly.
And if you make it easy enough that the wallet is intuitive, then why not?
Yeah, I think that's exactly how we're seeing it. And I think even from some of the regulators I talk to, is like there's concern that both the dollar amount of potential impact on credit unions combined with the speed at which things could occur could create even some level of systemic risk into the credit union system. So with our stablecoin, again, going back to how we've designed this with credit unions in mind, is how do we find ways to mitigate that deposit flight?
Yeah, actually, and that may be in my mind spinning. I got multiple questions here. Let's follow up on that real quickly, because I know that deposit flight is one of the big concerns around stablecoin. And my understanding is the way you're looking to design this would alleviate some of that the possibility.
Yeah, I mean, to the fullest extent possible, we want to reinvest the deposits that TruStage will hold to back those stable coins. to find pathways for reinvestment of those dollars back to the credit unions. And the details of that will be fleshed out as we go through the regulatory approval process, because we want to work closely with the NCUA in terms of having the flexibility to enable that to happen. So again, I think addressing the deposit flight, really important to our stablecoin. Looking at some of the financial impacts, so really kind of more on the income side
Yep.
of things. So looking at some ways that we think we can just share some of the economics back to credit unions, while also
All the more reason for the product to be owned by the credit union movement.
Yeah, that's right. I mean, I think what we don't want to have happen is that there's no solution that has, again, kind of widespread adoption and therefore interoperability, where it leaves us beholden to either the big bank offerings or the big crypto solutions that are out there.
And we
So
know
need to
that,
have,
several big banks have already announced. I think you mentioned a couple of the names: Amazon, Walmart, Meta. They've announced they're going in this direction. So
yeah, JP Morgan, you go onto the really big banks, they're all doing their thing. And again, that's where you just have a lot of momentum and a lot of influence, that could cause this to move faster than I think maybe a lot of credit union leaders are anticipating, because they're not hearing their members say anything today about stablecoin. And it's, kind of like, people weren't asking for the credit union's website address before the internet was really a thing. So, but it doesn't mean that it's not going to have a big impact on the future state.
you mentioned the way you're rolling out the pilot. I think you mentioned 7 states. I'm guessing maybe part of the reason for that is the state regulatory level, or maybe just the critical mass of making sure you have enough activity in each of those states. And I think, what did I hear? Is it 15 credit unions you're looking to involve?
Yeah, targeting around 15 credit unions. We are focused on states where we have a little bit more flexibility, we think, in terms of complying with some of the money transmission laws that are out there. And we'll be working obviously with those state regulators as well to make sure that that there aren't any issues there. But that really is kind of where we want to get out there. Again, kind of test everything, get into the ability to start to mint live coins and have them move back and forth. And again, more importantly, I think getting that credit union feedback, even on the stablecoin design. And so that will be really kind of the key areas of focus while we get our federal license in hand.
And that reminds me, when you talk about design, I heard somebody else pose a question to you that I wanted to kind of follow up on. Yeah, this was, the question kind of was in the form of, are all stable coins basically, the same? What differentiates them? And you're talking about the features and design. So maybe you can say a bit about that. And I think you've addressed this a little bit, but, is there a measurable ROI, or are we kind of looking at something like this is going to be table stakes and we just got to be there?
Yeah, a couple of things. One, I think on stablecoin design, one of the things we're looking at, because a major concern that exists with stablecoins today is that, okay, if I accidentally send this to the wrong person, is it gone forever?
Mm-hmm.
So looking at what are some like freeze and redeem capabilities, clawback capabilities that we might be able to implement to alleviate some of those concerns, especially as you're thinking about things for institutional usage, where those could be really valuable. That's not something that stablecoins developed kind of in the crypto space really offer today. So those are some of the features and functionality that we're able to incorporate. We want to get credit union feedback on that. So those are some of the design features that I am referencing that we're exploring right now. I think in terms of, will this be table stakes? I mean, I hear a lot of credit union leaders that I talk to like, well, why would I do this? This is just going to hurt me. Like, I'm not going to offer this to any of my credit union members or engage in this. And I think it's more of like probably going back again to different introductions of technology. Why would I offer mobile banking? That's going to require a lot of work on my part. And now it's another, system that I need to maintain. It's an expense that I have to have. But I think, it's something that if you didn't have mobile banking now, I mean, you would not have any, you really like having challenges being relevant to your member. And I think that's where this certainly has, I think that the potential to go. And I think, this isn't like a futuristic technology. This has been around for, a decade or more. But again, what is the difference today versus a year ago? And it's really the Genius Act and how all those big players are moving very, very quickly. That this is, I don't expect like just sort of a flash in the pan or kind of that flashy item that moves, is here today and is gone tomorrow. This is here to stay.
I'm curious. I was just in a meeting yesterday. I'm down here in Georgia, and I know we've just passed. It's only passed one of the two houses in our legislature, but we've got, I guess, something that looks very much like the Genius Act going through Georgia. I get the impression we're kind of at the vanguard. Are we one of the states you're looking at for that reason, or where are the states that?
There are. Yeah, good call out, Glenn. There are a number of states that have bills that are in various stages of.
I know Wyoming's always thought of as being
Wyoming. Yeah, they have definitely been really at the forefront of states. New York has had a digital asset law on its books. California has a new law, I believe, will go into effect later this year. Under the current lay of the land under the Genius Act is that there is a passage or pathway for issuers to get licensed at the state level. There are limits once you hit a certain size. I believe it's 10 billion of stablecoin in issuance and circulation. You do have to obtain a federal license. That federal license would be satisfactory to allow you to operate in all 50 states.
Gotcha. Okay. And
so
you're going right after the federal and up front.
Yeah.
With anticipation. Why bother leaving that?
That's exactly right. Yes.
You talk about the advancement of the price. I saw you give another statistic, and you mentioned that, usually stablecoins associated with crypto type transactions, and that is the majority of the volume, but there's actually the traditional, I'm not sure exactly how you defined it, but traditional payment uses were already north of $1 trillion, as I recall.
Yeah, I think when you look at the underlying statistics of where we're at even today, and the Genius Act isn't even really in full effect until early next year, is that you have about 300 billion of stablecoin in circulation today. That number is expected to jump anywhere from 2 to 6 trillion by 2030. So you'll have more assets than the entire credit union system combined that are expected to move into stablecoin. And then you look at the volume, just the transaction volume of stablecoins. It will be measured in multiple trillions of dollars. In terms of even just within the crypto space, I think the stat is, there are over $35 trillion of transaction volumes with stablecoins today, with about north of 1 trillion for traditional payments. So this isn't something that is new by any stretch. I think we're just going to see those numbers really explode in the next few years.
I mean, the takeaway I'm hearing here in terms of specifically about the design and whatnot, because one of the challenges, like you say, the same thing's true about real-time payments, is once it's gone, it's gone. It sounds to me like you're actually designing what I'd call an FI-friendly version of a stablecoin, and one that will probably pass muster with the regulators and get them more comfortable as well. Am I thinking about that?
Yeah, that's exactly what we're looking to design. We know the capabilities are there. Obviously, there are some pros and cons to either path, but again, really having our stablecoin designed specifically for kind of institutional use is really at the center of what we're building.
And we didn't ever say this, but I assume most of our listeners know, clearly pegged to the dollar, a stable coin equals $1, and hence the name stable. It should be sitting right there at that value because it's fully backed.
Yeah, that's exactly right. And I think when we look at, well, why TruStage, going back to that question, I mean, in addition to reaching 93% of the credit unions, we've been really kind of managing liquidity, managing reserves as an insurance company. So we have 90 years of experience of making sure that we're able to hold true on the promise. In the context of stablecoin, it's holding true on the promise that when I go to redeem that stablecoin, I'll be able to get my money back. And so we have a lot of that infrastructure already built. And the partnership with Blocktime has enabled us to bring in that technology piece to provide a stablecoin for the industry.
And as we talked earlier, but I think before we started recording, acceptance is key, that you can use this anywhere you want to go. And I think you've mentioned you've already kind of had some conversations with some money managers, some insurance firms that want to potentially kind of look into this as an avenue as well.
Yeah, I think that's right. Again, I see as we, if I were to make predictions about the future, we're not going to have a system where you have 100 different widely accepted stable coins out in the market. I mean, I think you'll see a lot of players go out there, but ultimately for a stable coin to be viable long term, I have to be able to use my Amazon stable coin and trade that in with a TruStage stable coin, or JP Morgan, pick your stable coin. So we do think, making sure that land in that winner circle of stablecoin issuers that achieve the scale that will be needed. I think looking at other adjacent industries certainly is on our roadmap.
And I'm thinking kind of to the current day analogy, it's the same thing as we talked about the Target Red Card. I'll pull that out of Target. I'll pull out one card if I want air miles, one if I want cash back. And it's just, you're pulling out which stable coin out of your virtual wallet instead of which physical card out of your leather wallet.
Yeah, I think that's a great analogy. That's exactly right.
So obviously you're kind of on the circuit getting people more familiar with the concept. If people do want to find out more, what's the best way of doing it?
So for credit unions interested in learning more, they can just visit trustage.com/stablecoin. It will take them to a landing page, which also will include a form that credit unions can submit to express interest in either the pilot or the phase 2 launch. Again, there's no cost, no integration required for any of that.
No integration. Wow, that certainly makes it easier.
Yes.
Well, Brian Kaas, the president and managing director at TruStage Ventures. Thanks. I find this absolutely fascinating, and I'll be very interested in following along.
Thanks so much, Glenn. Appreciate it.
So I'm sure stablecoin is going to be one of the hot topics that comes up. Again, I mentioned the CU Unplugged conference in San Francisco, March 30th to April 2nd. When I think about things we're going to be talking about there, I have to assume stablecoin and AI will be the top of the table. Again, those topics will be decided by the attendees. There is no set agenda. We're going to dig into the things that people are the most interested in. But I think it's a pretty safe assumption that those two are going to come to the top of bubble to the top of the pile. So if you want to find out more, but again, TruStage, interesting stuff there. We'll post a few links so you can find out more there. On the AI front, again, Glia is a company we've spoken to several times before, going well back into the days of their early successes at Finovate. Dan Michaeli, this was something that I discovered they released during GAC, a really impressive report with some good hard data you can dig into to understand better how and in what areas and how successful financial institutions have been in deploying AI into their operations. So let's have a listen to my conversation with Dan. Here with Dan Michaeli, the CEO and co-founder of Glia. And Dan, I've been following Glia. I go all the way back to, I believe, when you were still called SaleMove, and saw, it may have been your very first presentation at Finovate. You guys put a nice run together. I think you had 6 best of shows that spanned all 3 locations, East, West, and Europe. And then it feels like you kind of took the NBA slam dunk competition approach and said, okay, we got what we need. Let the other folks kind of go to it.
I appreciate the walk down memory lane. I don't mean to be a stickler and correct you, but it was actually 10 times best of show winner. But yes, and we have since retired our jersey when it comes to participating in the Finovate.
I got to go back to the Finovate folks. I only saw 6 little trophy icons on the unless they just don't have some of the videos posted.
Neither here nor there. It's okay.
Well, we're here to talk. You released last week, along with kind of timing with GAC, your banking AI benchmarks report, which I thought had some really interesting stuff. And given that AI in the credit union space is obviously a really hot topic, I'd love to kind of dive into that with you. But Glia goes back to well before we started talking about generative AI as kind of a term that everybody knows. You want to just take a quick second and kind of describe what Glia's mission statement looks like?
Absolutely, happy to. So, we help build thriving communities through banking interactions. So our sole focus is banks and credit unions, and in our purpose statement is to really help this ecosystem of financial institutions survive. It's a really unique and interesting feature of the United States financial system that we have so many different institutions serving so many different regions and communities. I think it makes it incredibly vibrant. I think it adds a tremendous amount to the country and to all of these different groups of people around the country. So our focus today is really ushering all of those institutions into the age of AI, right? And to use banking interactions as a mechanism to build these communities and to sustain this vibrant ecosystem. That's how we see it today. As we are a guide to this market in embracing, adopting AI, and using it to leverage their most powerful differentiator, which is building relationships with these communities.
My recollection is, I don't know if that's just the way you started or if it's more extensive than this now. I think of you as a call center tool in terms of helping, manage the interactions that take place on a contact center basis. Is that still kind of the primary place I think I've heard you've got 700 FIs in production now, which is a much bigger number than I realized.
Yes, things have come a long way. I would say that when we talk about the platform holistically and the teams that it helps support throughout banks and credit unions, frontline care teams are sort of member servicing or customer servicing is the first entry point, right? Typically. But it applies across the board. And the way that we think about it today is really as a banking AI workforce. So what we're bringing to this community of banks and credit unions is really an extension of their team. How do you use AI to extend the teams that you have, right? And provide them with an absolutely different cost structure so that they, again, can focus really their time on the most valuable activities, which in their case is building relationships with their customers and their members. So nowadays it's broader than what you may have seen in the past. It's really about an AI operating system for banks and credit unions, or a banking AI workforce, as I would describe it.
Got it. See, that's what happens when you retire your jersey. I haven't gotten the update for a couple of years.
Well, that's what we're talking today. So I'm happy to be here.
So, and the study that you put out, this benchmark, I don't think there's a whole lot of companies that are in position to do something like this. It's basically a sample of 400 of your in-production clients. That's a pretty darn good sized sample. I doubt many others can do that. You are looking at exactly how they're using it, the success they're having in using it. One of the things I think I don't know if the word is combat, but there's an MIT study that says that 95% of AI implementations have wound up not delivering the desired results. And your point is that's an implementation issue as opposed. Can you say a bit more about that?
Sure. Yeah. In the age of AI, one of the most important differences between an AI company, which we are, versus a traditional SaaS company, is that deployment and delivery becomes exceptionally important, right? It really is incumbent upon the AI provider to work in concert with the businesses that they serve to deliver not only the solution in production, but also the value of that solution, right? And that requires a partnership. And we've always been very client-centric, right? Our NPS is upwards of 70 today. And that's because we really partner with the companies that we work with in order to deliver this value. I like to say that AI without ROI is a toy. It's not really real unless you're delivering some kind of value. And that really boils down to doing some kind of work, right? And so this study that you cite, the 95% sort of failure rate out there, it's really about the horizontal nature of these AI deployments. I believe that in order to make AI what it is, or to bring the true potential out of this technology, you need to verticalize, you need to specialize. That's why we focus on banks and credit unions only. That allows us, our team, to develop a really deep expertise with our clients, bring best practices from one institution to another, and develop this body of knowledge and understanding that we can deliver to make these successful. That's why we have 400. We're 3 times the size of the next available alternative to banking AI on the market, because we have developed this delivery, this really specific delivery method, right, that allows us to make AI everything that it's meant to be for these businesses. So
I totally buy. I'm totally with you with regard to the verticality and looking at an industry by industry basis. So you've kind of effectively created your own LLM. That's the kind of the closed system that you're working from.
We use a series of LLMs to deliver our solution, right? We have a few that are proprietary to us, and then we use the best foundational models out there within our secure infrastructure in order to deliver additional capabilities where relevant. So we use a series of models, actually. Like I mentioned, we've been developing this proprietary model now for 8 years before it was cool. We have an LLM before anybody knew what those 3 letters meant. We were already investing in this technology. We started in about 2017, and so that put us ahead of the game when it comes to specific banking LLM delivery, right? And so that, combined with some custom models and some bespoke models that we've built by client, actually, as well as these foundational models that we use as well, it brings the power of generative across the entire platform, both customer and member facing, as well as business facing. So managers, agents, MSRs, executives as well.
Got it. Yeah, and you mentioned ROI. I really like the way you kind of establish what I see in the report, and the real kind of meat of it gets to a grid that shows 3 metrics: containment rate, escalation rate, and intentionally set to agent. Can you say a bit more about that? Because I'm a data geek, and I just love the idea that you can kind of dive into putting numbers to it.
Yeah, this is what the report is all about, is really providing this level of detail, right? So that folks that are considering folks that are considering what they need to bring, what they need to invest into for the age of AI, can see really how it plays out in the real world, right? And these metrics that you mentioned are key to understanding how to make the most out of AI for banks and credit unions. So there's containment first, which is what's the percentage of interactions that are handled exclusively by the AI without human intervention. There's the escalation rate, which is the frequency with which customers, while they interact with AI, they decide that they need human support, right? So they're in the AI conversation and they escalate to a human. That's the escalation rate.
This is the yelling representative kind of thing.
Yes, this is agent, human. And then the last one is intentionally sent to a human. And this is a really interesting one, because there are scenarios where the institution may want to proactively transfer to a person,
sure,
right? In particular, when it's a high value or a sensitive situation, right? You want to be aware of when those interactions need to be transferred without the explicit request. So those 3 percentages, those 3 rates, vary across the different intents or the different goals that the customer or the member is looking to achieve. And in the report, we outline the top 10 goals and what those different rates are across the base of 400 clients, so that institutions can start to get an idea of what these deployments really look like in production at scale. And now, of course, those rates will change over time as the technology develops, but this is the state of the art today. This is what great looks like. So that's a key part of this report.
And the 10 kind of different tasks that you mentioned, the ones that you kind of categorize as efficiency gains are the ones that, and I don't think this is too surprising, those are the ones that are really performing very well out of the gate. And then you've got the growth initiatives and the customer experience, member experience ones, which are still a little bit more kind of, I'd say, in the mid-tier. And I think that, again, is to be expected. And as you say, as the product matures and the language models continue to evolve, that's kind of naturally going to come up. But I that is consistent with what I've seen, that most companies or most banks, any company in general, tends to be looking more at the back office for their first implementations.
Yes, that's accurate. And what's great about this is that this is real. This is real data, right? So our goal with this is to continue to demystify this, right? Because there's a lot of noise and smoke and mirrors about what all of these technologies can do. And Glia is state of the art when it comes to delivering safe, scalable AI solutions to banks and credit unions, right? And these are the results, right? When you look at efficiency metrics, or efficiency goals and intents, you can see a very high level of containment, right? When it comes to growth or customer experience, the containment might be lower, right? You might be you might see more escalation, or you might see more of these interactions intentionally sent to a human representative, and by design, right? Mm-hmm. By design, you want that to happen. And so, but yes, as you astutely pointed out, this will change, right? Over time, the technologies are getting better. Our R&D teams are feverishly working towards providing more opportunities for containment and more opportunities for a deeper level of understanding. Our understanding rate today is upwards of 92%, right? So we're investing heavily into this, and then it's up to the institution to decide how they want to optimize the technology. That's why the delivery is so important, right? That's why we want to be a partner and be very, very deep in this industry, because every institution is going to be different in terms of what they want to bring to the interactions that relate to efficiency, or those that relate to growth, or those that relate to experience, right?
Mm-hmm. The one other metric that I think you really quantified nicely, and speaking of efficiency, the wrap-up time. Which, I mean, again, I think is another one of those kind of fundamental cases that, is a great place to kind of, I don't want to call it low-hanging fruit, but a place you can really create some gains and eliminate some headaches on behalf of the contact center reps. Can you say a bit on that?
Yeah, absolutely. So in addition to the member or customer-facing AI that we've been talking about up until now, there is a tremendous value unlock when you bring AI to the business itself, as we all know, right? When you leverage the capabilities to make the teams and the folks that are using this technology inside of the bank or the credit union more efficient. Now, one of the areas that we do that is specifically around the frontline team that is leveraging the technology. When you observe, we break down specifically what are the key activities that these individuals perform, right? And that's, everything from verification all the way to wrap up, right? Opening, greeting, problem resolution. We look at every type of activity that's happening when our system is being used to interact with customers and members. And wrap up tends to be there's an inordinate amount of time typically spent on wrapping up an interaction, right? Yep. You need to both summarize it, detail it, and then in addition to that, export it to a core system or somewhere else. And so all of that process takes a very long time. We've developed functionality that allows that time to be reduced by a tremendous amount, right? So you're able to take almost a 98% time reduction on performing that activity, because you can use really fantastic AI capabilities to automate that entire process and allow the user to really then focus on building relationships and the next conversation that they're going to have.
When I think about objections from frontline staff, I doubt anybody's going, man, I can't spend my time on actually documenting my conversation. Man, that's my favorite part of my job. Just that's not happening. Exactly. One more quick one for you. I love the phrase you've got in the report about autonomous financial intermediaries, which I assume we're talking about agentic AI. This must be something you're giving a lot of thought to. I've heard references that every institution needs to have somebody thinking about the agent customer experience. Where do you see that heading?
Well, look, I mean, ultimately, when you look at the body of work that exists within an institution, our goal is to find ways to deliver AI to our clients that allows them to optimize and automate as much of the low value work that exists across a variety of teams, and then really focus in on the highest value work. And again, that is a moving target, right? That will become a moving target over time. And as we see more and more automation taking place, then the question really becomes where to invest the additional time, right? What are the activities that you now open up for the human team members to be performing? And a lot of it goes back to being proactive, building relationships, doing cross-selling or upselling, and or establishing a universal banker model or a member advisor model. These sorts of initiatives really open up when you're actually able to create that automation.
That's a great point. So the report is available. Is it right there on the main Glia webpage, or should we provide a URL for one that gets you more directly there?
Yes, absolutely. We can do both. It's right on the front page of the site in the lower right-hand corner. You can click to download it. We can also include a link to make it easier. Absolutely.
Good. That's glia.com. Nice and simple, right?
Glia.com. That's right.
Well, it's great stuff. I highly recommend. I think, everybody ought to be thinking about AI, and B, this is a great way to kind of really make it real in the here and now, because like you say, you've got 700 folks in production and 400 of them talk to you about this report. So it's got some great insights. Dan Michaeli, CEO, co-founder of Glia. Thanks again for taking the time. Great to catch up and hear about all the great stuff you got going on.
It's always a pleasure, Glenn. Thank you so much for having me.
And after the fact, I actually indeed did do a little bit more research when Dan pointed out that there are actually 10 Best of Show awards. And I did mention that we did speak to Glia before when they were still called SaleMove. And what I discovered when I did a little more poking around the Finovate website is that there are 6 awards listed on under Glia if you do the search. And then further back, there's yet another 4 that show up when they were SaleMove. So again, I like the slam dunk competition analogy there. So we'll post a link to that report. I think it's good reading. I suggest you check it out. We have yet more content that was generated from GAC next week. So be sure to check in again. If you don't already, we would appreciate if you subscribe to the podcast. You can do that wherever you get your podcasts. I always check it out on Spotify. You can go straight to the Best Innovation Group website, big-fintech.com. Of course, it's at Apple, etc., etc. Until then, again, I'm Glenn Sarvati, 154 Advisors. You can track me down on LinkedIn. You can track me down via the Best Innovation Group. You can find our Grand Poobah John Best in both of those places as well. big-fintech.com. Once again, hope to see you in San Francisco at CU Unplugged. Hope to find you next week. Check it out the next episode. We typically have new content every Tuesday. And every week you happen to do so, we thank you for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech. Email info@big-fintech.com or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.